Today is September the 1st. Happy new month. New month. Same goals or different goals? What y'all doing this month? Let me know in the comments. 9:46 a.m. Eastern Standard Time. And welcome to Sierra Trades. My name is Sierra. Disclaimer, this is not financial advice. And any trade that you take in session is at your own risk. Join me Monday through 9 a.m. Eastern Standard Time. And if you have been here, you'll notice that time. So go ahead and click like and subscribe, and that notification bell in YouTube will let you know when I'll be on. All right, as always, let's start with our trading prayer. Father God, I thank you for giving me the power and authority to get wealth according to Deuteronomy 8:18. Father, you promised you'd make all the works of my hands prosper. So thank you, Lord, for all of my trades prospering. Lord, I declare my eyes are anointed to find the perfect trade setups and entries that will always hit my take profit, because in Isaiah 48:17, you promise you teach me how to profit. It is written in Ecclesiastes, trade because you will make me to profit. Therefore, I do not lose any trades. Just like the servant in Matthew 25:16, who traded 5 talents and made my money will always grow in my trades. In fact, you promised to multiply me 1,000 times, according to Deuteronomy 1:11. Lord, because I am Abraham, prosper as you promised in Genesis. According to Proverbs 8:18, with me are riches and honor, enduring wealth and prosperity. I stand on Psalms 128:2, whereby I will eat the fruit of my trades, and blessings and prosperity shall be mine. Every day is a trading day for me, despite what the market is doing, because I am aligned with Psalms. Always be mine, because I submit to God and I am at peace with him, according to Job 22:1. I speak to the forex and cryptocurrency markets and decree and declare, come now prosperity, as in Psalms 118:20. I come against all principalities, spirits, and generational curses of poverty. I declare and decree in accordance with Psalms 30:6 in my Isaiah 55:11 declares your word does not come back to you void, but it must prosper where you sent it. Therefore, I stand in confidence that this declaration is free that I have made from my place of authority as a king and priest, according to Revelation 1:6, has come to pass. In the name of Jesus, I am a multimillionaire day trader. Amen. And my affirmation of today, I am an intelligent day trader. I am an intelligent day trader. I am an intelligent day trader. All right, and on today, we're going to do something a little different. I'm not going to look at the charts because this week has not been my best week. I had one loss and I haven't found any other entries just because I was still looking for a buy, wasn't looking for a sell. And continuation, for some reason, just has not been my strong suit so far, which we are working on that. Post right here, correction. What does this look like on the fib? So it looks like we're going to leave this here and see if it hits the 618, even though price only came back to the 382. We are going to watch supply and demand video, and then we're going to go to the charts on GJ, get a clean chart, and we're going to see if we can recognize supply and demand, because I said that I did want to start adding that to my trading. And I looked at a lot of the comments on a lot of the videos, and a lot of people said that this was one of the best ones on YouTube. So we're going to give this one a try today. Alright, so I'm going to go ahead and click play and put this on full screen.
Like you, we believe cryptocurrency is the future. It's freed our hard-earned capital from the inflation and privacy concerns of fiat currency. But for every
All right. So if you spot such a hard time frame, demand or supply everywhere. All right. So I really hope at the end of this video, you're going to learn a lot of things and you're going to walk away with. Hello traders and welcome to the Trading Fanatic channel. It's Ilya here, and as always I'm super happy to have you here, and here we are with another educational video on supply and demand. In this video I'm gonna show you how I personally utilize supply and demand in my trading, how I identify it, how I trade it, how I draw it, and what exactly is supply and demand, right? Because for me it's really important to actually teach you what is the psychology behind supply and demand. Like, why does it work? How does it form? What is the psychology? And why is there supply and demand, right? So in this video we're gonna first go through some theory. I'm gonna explain some things. I'm gonna provide you some examples, some textbook examples, and then of course we're gonna jump onto the charts so I can show you some actionable insights both on the higher time frames and then how you can utilize it also on the lower time frames, because you know supply and demand exists from the monthly or even the yearly all the way to the 15 seconds, right? It is everywhere, all right? So I really hope at the end of this video, you're gonna learn a lot of things and you're gonna walk away with some great knowledge, right? If you're new to this channel, it's all about trading. I share my weekly outlook and setups every Saturday, and once per week, I'm sharing an educational piece of content or a trade breakdown video. So make sure you're subscribed, turn the notification bell on, and if you already did, let's jump straight into the video. All right, let's get started. So first of all, I'm gonna start with some basic and what exactly is supply and demand. So according to Mr. Richard Wyckoff, huge kudos to that guy for coming up with all those concepts in the early years. The law of supply and demand determines the price direction, and of course, supply and demand does not only exist in trading, right? It's a major principle in economics and business. Basically, supply and demand is everywhere, and this is what drives price of goods, services, and everything else, all right? So it's very simple. The concept of supply and demand is very simple. It's one of his laws. If the demand is greater than the supply, the price will rise. And if the supply is greater than demand, the price will fall. It's that simple, all right? And if there is a balance or equilibrium between supply and demand, the price will just consolidate. It will reach equilibrium. And this is really important also to understand, because when there are not enough buyers or sellers, or they're just exchanging like orders at the same place, at the same time, at the same price, the market will usually consolidate. And as you have a consolidation, that is when the market actually accumulates for a potential move outside. So it's really important to spot when the market is balanced, all right? Because when you usually see consolidation or choppy price or just clear ranges, that is when the guys are exchanging the orders and are potentially kind of negotiating where the market can potentially go, all right? Supply and demand is mainly...
Okay, so real quick, he was talking about Richard Wyckoff's method with accumulation and distribution. Accumulation is buy, I believe distribution is a sell. Let's get a chart real quick. And then of course he was saying consolidation is when they are basically changing the accumulation is a buy. So this is like all of the consolidation. And I don't know, I think I might go back to Wyckoff instead of just support and resistance, because this spring right here is what you're trying to catch. At least for me, I don't want to out of this. And then distribution, of course, consolidation. So he said, according to Richard Wyckoff, the law of supply and demand determines the price direction. Supply and demand does not only exist in trading, it's a major principle in economics and business, which it is. Supply, if demand is greater than supply, the price will rise. And when supply is greater than demand, the price will fall. So basically, that says simply, if demand is greater than supply. So that means when somebody wants to, when more people want to buy the product, but they don't have as much for people to buy, then the price will rise. So of course they're going to hike the price up. And then when they have more supply or more items, then the amount of people that they want to buy it, then they're going to drop the price. So like that's when everything goes on sale. So if there's a balance, equilibrium was median. And on the chart, pull up what there's a chart, but like to me, equilibrium is basically like if you was to draw a line in the middle of the chart, it's the middle. Maybe he'll go a little more in depth on equilibrium. See. Reading. I was trying to wait for it to go to full screen. All right. So let's see. Did this cut off on me? All right, so if there is a balance or equilibrium between supply and demand, the price will consolidate at one place. Supply and demand is mainly controlled by big financial institutions. We as retail traders do not have enough buying power to move price. What our aim is to identify when and where the big guys are buying and selling and try to follow them. And this is what I need help with. An important detail to note is that the banks cannot place their positions all at once. They break them down into small chunks, which is usually done within a consolidation. A lot of manipulation takes place in such areas. Furthermore, sometimes they cannot launch all of their orders at the same place, so they let the market move away and then come back to launch new orders. All right, so let him finish.
With our 10 lot trades, we cannot do anything, right? We do not have enough buying power to move the price. So what our aim is to identify when and where the big guys are buying and selling and just simply try to follow them, all right? It sounds easy, but it's definitely not, all right? They are always leaving some footprints for us to read, and in this video I'm gonna show you actually how to read them, but of course they make it hard for us to see, because if it was that easy, then of course everybody will be a millionaire. An important detail to note is that the banks also cannot place their positions all at once, right? So imagine you yourself right now going to the bank and saying, hello guys, I want to deposit 100 million. And they're going to be like, what? Where? How do you get this money? Like, is it tax-free? Do you pay blah, 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 blah? You cannot just do this. So what they do is they break those positions, those big positions down into small chunks, which is usually done within a consolidation, as I told you, when the market is in equilibrium. So at that place, a lot of manipulation takes place in such areas, so it's really important to spot that. And of course, furthermore, if they cannot launch all of their orders at that same place, they're gonna let the market move away. So this is when you have that first push outside of the range. And of course, they're gonna come back again at the same range because that is where they initially put their orders. So they wanna buy again or sell again from that zone. And this is why you're always gonna have retests of those supply and demand areas. And that is simply the psychology behind, all right? First, they're at equilibrium, they stack their orders, then they push the market away. And then if they want to continue further buying or selling, they're gonna drive the market down or up towards that same level. And then they're gonna launch new orders. And simply, this is how also structure is created. So of course, we're gonna jump onto the charts and have some real examples of that. But this is just a little introduction to supply and demand. Let's see how to actually spot supply and demand zones. And in this little kind of slide right there, I'm gonna give you a couple of rules, right? You can read through them, but it's very important to from the move from that zone or consolidation to be sharp and fast, all right? Because this leaves a footprint. This simply means that the banks have launched their orders from that place, right? Usually before the move, you will.
Okay, so rule number 1, a move from a price level zone should be sharp and fast. This leaves a full footprint, which means that the banks launch their orders from that price zone. Usually before the move, you will have an accumulation, consolidation, and a stop hunt. Examples later. A supply and demand zone could be either a single candle or a series of consolidating candles, depends on the time frame. So we're gonna go to we'll do the 4 hour, right? And for rule number 1, a move from a price level should be sharp and fast. This leaves a footprint, which means that the banks launch their orders from this price zone. Usually before the move, you will have an accumulation, which is a buy up, and consolidation, and a stop hunt. And so a stop hunt would be, so if it buys up, consolidates, and then buys up again, I guess because people would think that it's going to sell. This looks like a move up, consolidation, but I don't really see a stop hunt. Price will have to come back up here, and it's not really a sharp move down. I guess this is a sharp move down. So move up, consolidation, sharp move, possibly a stop hunt. Let's keep going.
We'll have an accumulation or consolidation period and then a stop hunt. We're going to have a lot of examples of that later. And a supply and demand zone could be either a single candle or a series of consolidating candles. It depends on the time frame, and there are numerous ways to draw supply and demand. Okay, we have the so-called ICT order blocks, we have just simple ranges, we have many other things. But what I told you, it's really important to actually understand the psychology behind why is this a demand. Okay, second rule, which is also pretty important, it has to break some sort of structure, preferably even a swing structure. Okay, a creation of a new high or a lower low after that push outside of the zone is always preferred when identifying a supply and demand zone, because that confirms to us the potential for higher or lower prices. So for example, simply if you have a new high, then of course what you expect is a higher low, right? And this higher low we usually get created where initially the banks started that move for the new high. More on that a little bit later, right? And of course, this is a little rule that I always like to see. This kind of gives a little bit more credibility to those zones. It needs to have a big sell before a buy. This is for a buy scenario, or it needs to have a big buy before a sell for a potential sell scenario, all right? And this actually creates the manipulation, which stops out traders and then fuels the move in their direction. Okay, so those are 3 simple rules that we're gonna explore a little bit later. Then let me give you some tips. Always look for fresh supply and demand zones. If you're a day trader, you have new supply and demand zones created multiple times during the day. You just have to use the lower time frames. For really intraday trading, I would advise for you to use the 1 hourly as your high time frame, and then drop to the lower ones like the 5, the 3, the 15 minute, where you're gonna constantly have new supply and demand zones. And it's all about following where the market consolidates and where it initiates out of. More on that again a little bit later. Supply and demand zones in the higher time frame, which is 1H and above, work the best because simply the higher the time frame, the bigger that range, the bigger that consolidation period is going to be, and that means that more and more and more a big stack of orders were stacked at that place. All right. So if you spot such a high time frame demand or supply right, you are guaranteed to have at least a reaction from that level. I'm going to speak more about reactions later because you cannot just simply take each and every supply and demand zone and trade from it. Okay. Usually, as I said, if you spot it right, you're going to have a pullback or a little reversal. But if you are trading within the trend, the market is always going to continue with the overall trend. All right. Avoid trading zones that have already been tapped into. Okay, so that means that the orders are already taken. So if the market returns back there, it will most likely give you again a little reaction and then it just will break through the zone. Okay, so look for fresh zones that are freshly created and haven't been retested still. Okay, and of course, always understand the underlying trend. You might have an amazing supply zone, as I told you, but if the market has changed structure to bullish and it's coming from a strong demand from the downside, then the supply that you spotted and that you try to sell from is just going to be a reaction point. Okay, so you're gonna have, where's my mouse? You're gonna have the market moving up, tapping into supply, then it's just pulling back to create a higher low and then potentially continuing up. I really wish to have a drawing tool right now, but I don't, so I'm gonna show you a little bit later. All right, so make sure to take note of those rules after you watch the whole video, return back to them, and I'm gonna show you how you actually can spot those levels and how you can actually utilize those rules as well. A very important point, how to draw supply and demand zones. There are numerous ways to draw them. All right.
If you want to make consistent gains from day trading, then you need to stop relying on indicators, other people's signals.
All right. Personally, I use two ways. You can either just draw a box embracing the whole range, that consolidation period that I spoke about, right? So you just take the whole of it, or you find the last bearish or bullish candle and embrace it with a box, okay? And this is basically the so-called order block. That is like the last sell candle before a big buy, right? You can also take the last candle before the move occurred, right? So this is basically, let's say, well, if you look at this example, there is the last sell candle before the move up, but this actually created this range, right? But as you can see, this is the candle before the huge move to the upside. So you can actually take this one. Right there, there is your bearish candle that actually creates the range, all right? But the market exploded after those two indecision candles. So you can actually take those little indecision candles as your demand zone. Right there, what do we have? The market created a big consolidation. There is a big sell candle. So there is your whole range. But where did the move initiate from? After this little bearish indecision candle, that is when the momentum kicked in. So that's how you can make your supply and demand zones a little bit smaller. If you look right here, there is your whole range. There is your last buy candle before the sell move. So this is the kind of the, we also call it refined as well if you want to, but this is the whole range. We push outside, what do? We have another big range, but the move initiated after this little indecision candle right there. So we can take it. Then the market returns, we have again another range, but so you take the whole range like this, you can see the market consolidating, but where did the momentum kick in? After this little indecision candle right there. That's when we kicked, all right? And you just continue doing this over and over. And as you can see, the market perfectly reacts from all of those levels. There is our consolidation, there is the manipulation up, there is the sharp move to the downside. The move started after this bullish candle, right? So there we go, and we're having the reaction. But as you can see still, why is this going to be just a reaction? I'm just looking at this chart, and as you can see, we're coming from strong demand. The market is already changing the structure. We're having a little demand right there. The market tapped inside, strongly reacted, and personally for me, I think right now we're actually going for a higher high. So this supply is simply a reaction point, a pullback to potentially tap into this range or this range, and then to potentially initiate higher prices. Okay, so those are two ways that you can draw supply and demand zones. Personally, I prefer the bigger one. I prefer to draw the whole range because as the market gets inside that range, let's see right here, as it gets inside the range, you can drop to a lower time frame, like the 1 minute, and you can search for entry opportunities. Okay, that's how I do it. But of course, if you want to look for those very little ones, they're also pretty fine, but most of the times you're gonna get wicks. You can see on this one, we got a wick below the zone right there, but the demand was never broken. Okay, also this one, we had a spike, actually a couple of spikes above this little supply, but the market never broke the high of the range. Okay, so pretty important. And finally, let me show you how to actually trade from supply and demand zones. Like as I told you already, the market has a fractal nature. So the setups and the patterns you see on the monthly, we will always repeat on the 1 minute and even the 15 seconds and even lower. It's all a matter of your preference and kind of if you want to be an intraday trader, swing trader, day trader, whatever it is, that is how you actually determine your time frames. And I have videos on that as well. So make sure to watch all the educational videos. There are two types of entries. Usually the one that I prefer is the conservative, but you have an aggressive. So there is of course, your range or your accumulation. There is your manipulation that actually creates that demand. And then we have a pump outside that also breaks structure, okay? And then potentially the market pulls back, so you can just enter either from the range or from that level.
And this still sounds the same as our POI. When price breaks structure, you come back to that bullish area. So it's still the same thing. We're only 12 minutes this video. I'm not feeling well today. I was gonna try to push through, but we will come back and finish this